So the spot price of gold is falling today. That's on some better than expected news. That's good, right? Problem solved? Well, it turns out there's some bad news out there too. It's tough to get away from that bad news topic. Bad news and then what that does to the price of gold, and then how that gives another good reason why you might want to have some of it in the first place. Am I making sense? It's a strange cycle, and you can't talk about the price of gold right now without talking about all these things that are leading to it. So here we are talking about bad news again. I guess that's what I'm trying to say. So let's start with the bad news coming out of Eastern Europe. And not the news itself, just the impact of that news. That feeds into what would have already been considered bad economic news. And if you were to just zoom in on inflation, we were already seeing historic numbers. At 7.9%, February CPI numbers were the highest they've been in 40 years. But that alone wouldn't be so terrible because some of that was driven by short-term supply chain issues, and some of that was driven by unfair year-over-year comparisons. In other words, certain things were artificially low a year ago, and the current supply chain issues are kind of a cascade effect from global trade more or less stopping. So it's both a delayed reaction and also something that would begin to self-correct. And what I mean by that is just that as the high year-over-year numbers complete that rotation, they begin to compare against the somewhat artificially inflated numbers. So the self-correction that I'm talking about is just that the new year-over-year figures would begin to look better than they actually are since it's a comparison percentage. Okay, so stick with me here. I'm going to tell you what this means for gold, or at least what it means to me for gold if these numbers don't begin to self-correct soon. So the inflation issue today is totally different than it was going into 2022, since we now have new geopolitical supply chain shocks that are going to add to the cascading issues from the shutdowns and the global trade issues that all came from COVID. And if you're keeping count, we have 3 new shocks hitting in 2022 on top of what we already had. The first is Russia's invasion of Ukraine. We already know what that's doing to oil. We already know what that's doing to other commodity markets. I certainly couldn't tell you how that's going to go or when that's going to end. I could just tell you to be happy that you don't live there. The second is a new lockdown in Shenzhen, China. Manufacturing is going to take a hit, meaning further supply chain issues. And then third, we have rate hikes coming from the Fed. Now you put all 4 of these together and you have possible signs, maybe even probable signs of a coming recession. And none of us know specifically what all that will do to the price of gold, but we can already see what the Russian shock is doing to the markets right now. We can see a little bit of the Fed tightening already priced into the market as well. But the new supply shock from the zero COVID policies in China that are shutting down Shenzhen, and the simple fact that inflation will be going even higher with the oil price spike means that we're going to be dealing with all these things that are pushing the market down for longer than we thought. A temporary drop in gold prices would not surprise me. Very little surprises me with this market right now. But my mid and my longer term predictions have definitely gone up. It's not that I make predictions with any authority, at least. I don't. Listen to me, you'll lose all your money. But for my personal planning, I'm more bullish on the price of gold than I was at the start of the year. And I'm reconsidering some of my goals. Specifically, I'm moving them up. Now, I felt like I was getting close to a point that I would feel comfortable slowing down a little bit, but the next few weeks are going to give us a lot of new info, and if it goes the way that I'm expecting right now, my personal slowdown number might be out the window. Now, I'm not saying that I'd buy more if we do move into a recession. That's really a whole other topic. It's just a general feeling that the price of gold has new support, where previously I was expecting to see a summer price dip. And then longer term, I was expecting to see a little bit of a correction before heading back up. So this is not a prediction, it's not advice, but I'm picking up gold right now as a value buy, or at least what I see as a value buy, where a few months ago, I saw it more as a simple dollar cost average. And going into 2022, I expected to see a relatively narrow trading band, somewhere between 1750 and 1950. We're already outside of that, With all the new events and all the new supply shocks, the potential for that structural inflation, that's inflation that sticks around, I wouldn't be surprised if we saw that 2250 or even 2500, who knows, as a midterm prediction. So long story short, one, I think we have a lot more potential for strong gold prices, and two, I should have a bit more gold to show on the channel. I'm not stopping anytime soon. So even though we're seeing that spot price of gold drop today, and really that's been my expectation for a while now, it's not really what's important to me. The longer term price is. And from everything that we can see today, this week, last week, it looks like even with short-term volatility and even some short-term drops, we're still looking at a lot of midterm and long-term bull signals. And don't let any fancy words fool you. I'm no analyst. I don't know what's going to happen in the next few months. If you do, let me know. But if the price holds anywhere above 1850, well, that gives a pretty solid floor to keep moving up. And I have a feeling that we're going to continue to see growth over time. Okay, so let us know what you think. Does the threat of a recession change your buying behavior? And then in general, are you bullish on gold prices, or do you think it corrects back below 1850? Let us know, hit us up in the comments. And while you're there, be sure to hit that like button if you found any of this interesting. Make sure you're subscribed if you're into the topic. And if you're still here, thank you again for watching. I always appreciate your time. Take care.